A very good afternoon to you traders. It's Mark here from the Day Trading Room. Time is 20 to 1 London time on Sunday 15th of May 2011. And yes, what an interesting week. Really great week, really great week. Apart from Wednesday, for me, which had some connectivity issues, which had nothing to do with me. It was the ISP, and while they were fixing that, and it was up and down, the connection was up and down, seemed to be stable just as we started going into the open. But I took the decision not to take any trades, and I stuck to that. If you make a decision in trading, even if it turns out to be wrong in terms of trading or not trading, then it doesn't matter. You've got to stick with it because you can't win either way. You can't win either way because if you say I'm not going to trade, right, and then you do trade and you lose, all you're going to think is, why didn't I listen to myself when I said not to trade? Okay, and then if you trade and then you make some good money and you win, make a couple of nice winning trades, then all you're going to do is reinforce the behaviour of not listening to what to your own voice. So as soon as you say I'm not going to trade, it's the same as soon as you say I don't want to take this trade or I don't like this. You have to stick to that. You have to stick to that. Trading is such a mental game, and little things like that make a lot of difference. Right. Anyway, so what I'm going to do is Thursday was a great day for me as well. Really good day. In fact, it was a fantastic week on the Dow. Really couldn't have asked for more. I say apart from the Wednesday technical issues, Monday, Tuesday, Thursday, and Friday, all very profitable, very pleasing. We are getting a lot of good movement in the Dow, all sorts of trade setups. So yeah, it's great when this comes along. We've just got to take it while it's here, because we know how boring the Dow can be when it goes quiet. So I'm really going to focus on Friday. Really concentrate on a lot of trades on the Friday. Um, and I try not to make this longer than 10 minutes, but I think there's some really important things to talk about in terms of Friday's trades, because as I say, we had all sorts of trades, continuations, fades, counter trends. Really just took them from every single setup in my arsenal. So let's get cracking. Right, here's the Friday open. Very negligible gap, nothing at all. But actually, before we talk about the open, there's the overnight trade, by the way. That's the open. So there's the overnight trade on Friday, just so you can get an idea, right? Double topped, okay, and then push lower. So the immediate trade prior to the open, an hour prior to the open, is actually a good push lower, a break through this overnight support. You can see there, consolidation underneath it, and then a further push down. We got a last little pop up before the open, but this level here is the key level because it's 12,700 on the Dow cash. Right, so we've opened up. This here is 12,700 on the cash. I'll show you on there. This is the cash chart here, by the way. 12,700, and we opened up just above it. Obviously, the cash isn't quite accurate on the open because they're still getting all the actual prices. So you have to use the YM and use the equivalent. So that was the equivalent on the cash, 12,664. So we opened above that and then we pushed lower. Now bearing in mind that the pre-market action just before the open and the overnight range, the fact that we double topped, it is looking like there's going to be some sort of push lower. Now I missed the initial push lower. I thought it was a bit early for it. This was a little bit dirty. I thought we'd pushed under the 12,700. Started to roll back over, but I didn't like it. So I flipped my viewpoint over and said, okay, if we can get to the overnight low, which was 37 if I remember rightly, or that's the Dow cash. Hang on. If we can get to the overnight, I'll get the right thing up. Yeah, 12,637 was the overnight low. So if we can get to that, then I'm up for going long on that for a little bounce, especially as the drive had been quite a lot from the open. So anyway, let's move this along. Yep, got the overnight low just about. Oh, it was it was close. It just tagged 37, and I ended up getting a fill a little bit, a few ticks higher than that, which was okay. I really should have been sitting resting at 37. I don't know why I wasn't. That was nice enough. Ticks were low. A little bit nervous about it, but we had come quite a long way. So actually, I was right to be nervous, because I got a first scale off, and the second scale ended up being break even. So a bit of a waste of time, really, a bit of a waste of time. Um, but then, okay, we had data coming out. This is what this little marker here is for, just to remind me that was the data. So there's a little downtrend. We popped up after the data, fine. Everyone's thinking now what's going to happen. Are we going to push to new highs? What's the story? Let me zoom in a bit more for you. Okay, what's going to happen? Are we going to push to new highs? We didn't. I waited. I didn't think this was that great. I mean, look, highest ticks of the day, but in reality, they can only get to less than 500. On a day to move. I think just didn't buy the fact that we were going to be pushing back up, especially with the weakness, especially with the way we are at the moment, especially with the fact that, if we go back to the cash chart for you, that 12,700, you can just see the market's not been happy above it for the last several days. Wednesday we pushed straight down underneath it and spent most of the day underneath it. Thursday we spent most of the day. We did have a very strong rally, but we popped up and we came back immediately. Sellers are active above that 12,700 cash level. So all I can do is bear that in mind when I'm actually trading. So we then pushed. That was the push up to the 12,700 cash. It failed. I waited for an extra candle on this one before taking the short, just to get that confirmation. That was okay. That tick reading, the fact that we pushed back down there, and then we hadn't got the further drive up. I was happy that the high there had failed before 12,700 cash. There was a lot of things going for it. So took that, scaled off as usual straight away, and then just looked to run that until we got another low tick reading. So got the low tick reading, gave it another 30 seconds or so, I think, and that's there. Gave it another 30 seconds or so. There's the low tick reading there, and just took it out. So I still wasn't convinced what the direction was. We had come quite a long way, but who knows. Anyway, that was that. We got a low tick. Then we got the low tick reading here, minus 1,000. Started to push back up. Got a decent high tick reading here. So really, you can now look for some sort of reversal. I was still fancying the short side, to be honest with you. So I stayed clear of the longs. And this was a lovely little trade. This is nice. This is the sort of thing that you really do want. Okay. If this is your sort of thing, you can do this. You can put your trend line in like that. You could have even done that on the way down. If that's your sort of thing, then when you've got markets like this sort of thing does actually gives you some sort of guidance, should I say. But anyway, no, that was not my thing, but you can do that. Anyway, so we pushed up to 12,700. There's 12,700. Nice high tick reading, great. I'm just going to wait because we have seen a little bit of strength here. Ticks have been relatively high. There's a good little drive up on the ticks. Okay, volume's not really that great. We've now pushed above the 50%, which is probably around here. But we're 12,700. There's not that much interest volume wise. I see the high tick. I see the second push up here. Nowhere near a high tick. Just no participation at all. It's a good level. I know it's a good level, 12,700. It makes a lot of sense to have a go. The risk is so quantified. It's great. It's great. We've already put the high in here. We've now put a lower high in here. So I'm in. I'm in on this. I'm happy with this. Great trade. Risk quantified. Scale out some risk immediately, and then trail it. And just looking for, some sort of push to this last low here, which was really what I was looking at. Wasn't completely thinking we were going to completely fall off the cliff like we did. But then again, I never really catch a lot of those trends. Occasionally I will do. But my edge is really the first impulse. That's my edge, is the first impulse, based on the tape read. That's when I'll take off a lot of my risk. That's when I'll make the trade a free trade if possible, and then I'll try to stretch that trade out if I think there's further mileage in it. So in this case I got a couple of nice scales on that, and I was all done there. So left this to now drift down. We're 10 minutes into the video already, but I really want to discuss this candle here. So let's get to that if I can. Push lower here. I thought that was the flush. Let's just go over to the cash. Where are we? 12,600. We started to push through it. We loitered around it, so I wasn't going to buy at 12,600. This is the 12,600 level on the cash. by the way, guys. This line. Look at the way we loitered around it. I mean, what's that? A classical triangle or whatever the textbooks call that. It does look does look horrid for buying purposes. So stay clear of that. Wanted to buy on the flush. 3 bar. There's the tick, and I bought it. It was around here. I ended up taking a reasonable bit of heat on that, not stopped, but we came back and ended up taking that for a couple of tick loss because I just thought, you're on the wrong end of this. This is not right. Why is that not right? Because he hadn't got the confirmation in the ticks. We hadn't got that real panic in the ticks. And in reality, we'd broken through pretty convincingly. I should have looked at this before and said, hey, this is pretty weak. It's just banging against that. We then broke. Really short in the first pullback was the trade to take, which is why I've put it in circle here. That's just the gift really, rather than looking for the fade. But anyway, I didn't take that. I was still looking for the long. Let's delete that off now. Then we got this monster flush, really low tick read. I haven't seen one of those for a while. 1300, 1400 ticks. Great, I'm watching the tape here, watching the tape intently because I'm looking for that buy. I'm looking for that flush. Barring any news, things like this can't be sustained in the short term. Now, you don't know, obviously, there's nothing news come out, but if you see weakness, real severe weakness like this, panic weakness, low ticks, good volume, ploughing through levels with a complete disregard from the sellers of what price they get, okay, and then you see a pause, or you see the buying come in this case it was clear to me, and it was clear at 12.509, 12.510, there was thick demand there on the bid, on the tape. You could see it on the tape. You could see these two levels here, the 9 and the 10. Actually, the low was 7, but that was just a little bit of a spike low. But the real demand came in at 9 and 10. You could see the volume being scooped up there. When you see that situation, then there really is a high probability trade. I know it takes time to be able to read the tape and actually understand what you're seeing, but when you've got this combination of unsustainable, if there's no news, and I'll put a little caveat in there, and also manage the risk. But if we're talking normal market conditions at probe highs, probe lows, buyers, sellers, a panic move like this is an opportunity. And if you can time it right, then it works wonders. So, which is why I'm very active around these levels, because I do rely then on my tape reading ability to get me in. I get out on the first impulse, make sure I've put some in the bank, and then if I think I've got some more mileage, and I'll hold it. And that's what I did here. I got a lovely entry on the not far off the low here, 3 or 4 ticks off the low, popped up, scaling out majority of the position because we're still in a savage downtrend, and the edge really is only at that moment is only taking the panic, taking the other side of the guys who are panicking, but waiting until there's a pause, and not stepping in front of them when they're panicking here and here. We're waiting for them to panic, waiting for that pause, waiting to see on the tape that some other buyers are actually seeing the same thing. Then we step above those buyers, then we get that little pop, hopefully, take off the majority of the position, reduce a lot of the risk, and then see what else we can get out of it. In this case, we popped up really nicely. That was a great trade, a real aggressive pop. But we loitered around here far too long, and this is why I closed the position here. And let me just tell you, I want to talk about this candle here. Okay, this candle is the most important candle of this move. Let me delete that off. And the candle I'm talking about, guys, is this candle here. Okay, now I'll zoom in a little bit more so we can see this clearly. When we get a downtrend and a push lower, let me get the drawing pen out. You'll forgive me if I do go over 15 minutes here. I hope I'm still capturing your interest, because this is really interesting stuff. This is the sort of thing that really gives you the edge at these extremes, and you can get those really great entries. And if you're better than me at holding trades for the long term, you can get you can get tops and bottoms. Right, this is the move we've had. Let's just draw this in. Push down, first pullback, fine, which is here. Re-push lower, really good flush, okay. Pull back. Right, now we've got the scenario where you expect after that, if it's genuine, you'd expect one more push lower, perhaps to revisit, and then that's when you get the turn. And it may not be a full turn, it may be consolidation. Okay, but whatever, the long is okay and it's working. Right, that's what we expect. That's the classic pattern that we see time and time again. So we had that drive down. There's your pullback. There's a push lower. There's the drive down here. Okay. Now these three are the pullback candles, if you like. This now is the rollover candle. Okay, and this candle here, I'm okay with, right? Because at the moment, let me see. Let me just zoom in on this and just show you that that's the push down. I'm starting from here, by the way. That's the push down. We've got the retracement, which are these candles here. Okay, we've now got the start of the pullback here. Yeah, this candle which put the tail in is showing this effectively. Okay, it then pushes up because that's what the wick is doing. We're talking in terms of a minute. Okay, so the next candle, which is this one here, has to be green and up for us to confirm that we have bottomed. That is the crucial 2 minutes. I'll describe that. I'll go through that again because I don't know if my description is very clear to you guys, but let's just try it again. There's the push, which is there. There's the pullback. Now we're already looking for a bottoming pattern here. Okay, we expect some sort of revisit. Okay, whether that's a wick, whether that's a double bottom. Now it did happen later on, which is okay, and we'll talk about that in a second. But I'm talking about this here at the moment. Okay, that here. So there's the push down. There's the retracement. 3-4 green candles, fine. Started to loiter around here, which is why I took the position off. But this wick, okay, I'm happy with it. If I'm still long, I'm happy. I expect a revisit. The next candle, this candle here, is the key to reading what is happening in the next few minutes. Because if that pushes down, great, and it's pushed back up, so far so good. That there, okay, that's the wick forming. Now, if it is genuine, buyers are seeing value, I would want to see that level revisited at the least. But we didn't. This candle tries, doesn't get anywhere near, and closes near the low of that candle there. Okay, and I know this is very short term and it's very, intricate, and we're looking and we're trying to drill in on a 1 minute. But at 1 minute is where the pattern happens. Now you can use a 100 tick or whatever tick to see it actually flowing, or on the tape as I prefer to. But I just want to show the importance of that. And so when you don't get that, we can expect the revisit. And that's what we've got. We've got the revisit. Okay, this is now then where we see exactly what happens. Okay, and we see, excuse me, just bang the microphone. This was a far more high probability setup, and the risk is a little bit more quantified here. And you don't have to be so on form with your tape reading. You can. This is just a pretty standard pattern. Of course, your tape reading helps, but look, you get the low, you get the revisit. You don't get a visit to the lows. The volume's nowhere near as there's nowhere near as much interest. We know from before there was interest down there because we popped up aggressively. Ticks nowhere, didn't go to minus 1,000. It's worth a go. It's worth a go. Let it wick first. Let it wick, which is why I waited. And you can see the second I bought on this candle here. Let it wick, and then your risk is quantified. Let it wick. Your risk is quantified. Scale off as soon as you can. And this time I was looking for plus 300 on the ticks. Why? Because look how many times it was a sort of level that we struggled with earlier in the day. And that was a nice little trade. Not far off the lows, and then pop. There's the pop in ticks. I was waiting for that for quite a while. Then we got it. It did go higher, of course. That's fine. But interesting group of trades that. And if that's your sort of thing that you enjoy doing, I really would encourage you to have a think about why. That candle is important. Why, when you see that candle, you can expect that there is going to be some sort of revisit, and why that wick is important as well. Just think about the participants and perhaps put yourself in the shoes of someone who's stuck long, someone who's short, and just write down. I've done. I used to do this. I'd write down. Okay, imagine myself now if I bought here and I'm still here. What motions are you feeling? Because If you can do that, you can start to see who's on the other side of your trade, and more importantly, not only who's on the other side of the trade, but who's going to then push the trade in the direction that you want after you've made the purchase or the sale, because that's all you're doing when you're trading. You're expecting someone to buy at a higher price to push it higher than the level you bought it, or sell it at a lower price. But anyway, interesting. Love those sort of setups. Really, really great. You know, people are going to tell you that they're high risk and stuff, and yeah, of course, if you stand in front of a train, you've got to manage your risk. But if you just keep looking at these setups over time, keep seeing different things in the markets, you're gonna get these great entries. You know, it's just the way that it works. You know, the guys out there getting the entries, of course there are, because every seller there's a buyer. So for every one of person sold there, someone bought. So worth thinking about. Worth thinking about. But really, if you're not comfortable with it, just wait until perhaps the second push lower, the wick, and then you've got your risk nice and quantified. You don't have to be so focused on the tape. That you're nice and quantified risk, and ready to rock and roll. So one more trade for me. I did say this would be a 10-minute video, didn't I? It's 21 minutes. I do apologise, guys, but I'm passionate about that sort of setup. I really like it. Anyway, this was okay trade for me. I like this. This is the first unwinding. First push back, first high in the ticks here. It was just worth a shot. Let's just stick the 5 on. I think. Yeah, you can see here. It's the first unwind. I haven't got a stochastics on it, but it is. I know it's the first overbought condition. Back just above that 12,600 again. Is there any interest? I'm looking. Any interest? No, there's not a lot of interest there. Let's have a short. I actually thought we'd revisit the lows, and I thought, I've had such a good week. My plan for this was scale off half of the position for plus 10. Okay, bring the stop to 9 above entry, and then it's a free trade. And then I said to myself, I'm going to scale once, and then I'm going to look for new lows. That was the plan. It'd been a great week. I'd wanted to reduce the risk so that it was a free trade, which is why I was looking for that plus 10. And the irony of it is, you're not going to, well, you will believe it, because this is what happens. The short was here. It was 9, and I just thought, oh god, it's just not going to let me have a free trade here. It was almost as if it was teasing me. It's almost as if the market knew. I know it doesn't. I'm joking, guys. I know some people to say that seriously. The market knows where your stop is. It knows this. It doesn't. It doesn't care what your position is. But sometimes it does appear like that. Just couldn't get my 10. Popped up a couple of ticks against me. I'm thinking, last trade of the day, and I'm gonna take a stop. So my stop was above there for the lot. But eventually I ended up taking plus 9 because it just did it twice to me, and the third time I thought, I'm not letting you. I want this as a risk-free trade. Really, this shouldn't do much. It shouldn't be holding here for too long if it's genuinely going to go to new lows. So anyway, I got my 9, and then I ended up using an 8 tick stop above my entry. So it was risk-free in the end on the second half. But that rolled over very nicely. Not as nice as I'd like, but I took one more scale off here, and then I said, listen, hold, for goodness sake, hold this, because it is free. Now you've actually made a profit on the trade. So great week. Why not hold for new lows? You think there's going to be new lows, then just hold it. But we didn't get it. And I closed it a couple of seconds before the close. Still for a nice profit. Then that was a really nice profit, that one, and it would have been absolutely perfect if we'd have pushed to lows. I'd have scaled another out as we probed to the last low, and then looked for some sort of panic towards the close. But we're not quite there yet. That's bear market stuff. That's the sort of thing that happens in bear markets, and that's the sort of common setup when you're in a real severe bear market. You get the good drive down, the counter trend over lunchtime, maybe till about 7:30 London time, 8 o'clock, and then it just starts to really gather momentum, and then you get that plough lower, and those are great, those are fantastic. But we're not quite there yet. We're just still, technically we're still in a bull market. Just got a few little down days to deal with, which is great. So volatility's there, guys. I hope you had a great week. Oh, one more thing, webinar. Okay, let's do the webinar on Friday the 27th. So not this Friday coming up, the next Friday. Pencil this in. I'm going to probably do it just after the close. So let's say 10 past 9. Give you time to get a cup of coffee or whatever. Hopefully that's good for everybody. It's going to be an informal thing. I'm not going to do what I did before. What I'm going to do is, over those 2 week periods, send me questions. Send me questions via email. Before then, and what I'll do is I'm going to answer those questions in the webinar, because a lot of people send similar questions, and it's great that we can all discuss it and we can all learn from each other. And even I've had some great emails from one blog viewer reader about some patterns on the daily charts, and that's fantastic. Even I like learning new stuff all the time, and seeing new things in the market. So send me your emails, any questions, or send me your trades. Send me some trades you did, good or bad. Perhaps we'll talk about those and why it worked well and why it didn't work well, and we can all learn from each other. We can all improve. That's what we're here for. We're serious about this game. I know the majority of you guys who email me are really serious about making it work. So we can all combine our efforts. Yeah. So we're going to discuss market action. I'll talk about some of my trades as well, and just answer some of your emails, and just do a sort of interactive Q&A. So that's Friday the 27th. Pencil that in. Do it about 9:10 London time, so it's 10 minutes after the close. If the majority of people say that that's not good and we need to do it maybe on a week earlier in the week, if you guys are going out on the Friday or whatever, then fine. I can reschedule that. But pencil that in now. It's Friday 27th. We'll give it a few days, and then I'll get the proper GoToWebinar link done and get that out to get that up on the blog, so you can register for that if you're interested. So as I say, it'll be questions and answers, anything to do with trading. I'll go through some of my trades. I'd love to see if you guys have got some trades. Send me some of your trades via email. We'll run through them. Discuss some of the market action, Q&A, that sort of thing. Pretty interactive, informal thing, just so we can just keep developing and growing as traders, and just getting better and better, and ultimately making getting the bottom line to a level that we want or aspire to. Good trading, guys. As always, please manage the risk. I know I talk about these setups, and you look back on it, you think great, it looks fantastic, but it requires work, it requires risk management. You'll see times when I'll take stops and they don't hurt me because they're relative. They don't hurt me because they're relative. Trades that don't work, I look to scale out. Risk management for me is scaling out quickly. That's just my style. May not suit others. Carve your own niche. Take little bits from other traders and just create your own trading strategy method, and just keep at it. It's good to see a lot of guys really focusing hard on their trading and making progress, which is what it's about. So as I say, manage your risk, guys. Have a great rest of the weekend, whatever time zone you're in, and enjoy your trading, but manage your risk, and we'll look forward to another great week, should I say, next week, whichever market you're trading. Okay, guys, take care. Back with another video soon.